Factoring is another term for accounts receivable financing. It gives a company the ability to convert the receivables to cash overnight. A company that has credit-worthy debtors will go ahead and sell us their receivable. We advance a percentage of the receivable to our client today. When the debtor pays us, we give them the balance back, which is the reserve minus a small discount fee.
Factoring is a term used for what's properly called accounts receivable financing. And it's a tool for businesses when they are involved in transactions with other businesses. So it's B2B, as we say, and it is the process whereby the business owner will, in effect, borrow against his receivables, although it's not actually a loan. What he's doing, he's selling the receivables to the factoring company. And the factoring company, upon the sale of those receivables, will advance a portion of the face amount of the invoice, a large portion, 75, 85% of the face amount of the invoice, to the business owner as soon as the service or the product is confirmed as having been completed by the customer. As an example, if you provide hammers to Home Depot, you deliver the hammers, we contact Home Depot, we find out that they got the hammers, and we immediately pay you on that invoice. And so you don't wait the 40 or 50 or 60 days to get paid by a Home Depot. And that's the process.
The benefit to them is cash. The benefit to them is converting their company to cash. If you have your company and you've got your company converted on a cash basis right now, so every product that you manufacture, every service that you deliver, you are virtually being cashed out on a weekly basis for that. It changes the whole dynamics of your business. You're now able to go and book more business. You're able to finance more business. You're not pledging personal assets. You're not putting yourself in a position where you have a bank loan or a line of credit that could be called at any time. And you're not being put in a position where a bank can deem themselves insecure based on the economy and call your note. And what it does, it restricts your cash flow, it forces your business to shrink up, and it can kill your business. By accounts receivable financing or factoring, we can go ahead and, based on the products that you deliver or the services that you render, we can cash you out today no matter what the economy is in the future.
Amazing, because we deal with businesses that are generally not accustomed to getting their money immediately. It's interesting. By custom, certain businesses, certain professions get paid right away. What happens when you leave the dentist's office? You go to the front desk, the dentist has just performed his service, just finished, and he gets paid because you pay before you leave. You go to the grocery store, you buy your groceries, they put them in the bags and you pay the bill. These types of businesses have the luxury of not waiting to be paid, but most business owners aren't in that situation. They send out a bill and then they wait. They go to the post office and they wait, and they go to the next day to the post office and they're looking for the check in the mail, and they wait a month and they wait 35 days and 45 days. And unfortunately, it's tough to run a business that way. With factoring, it's just as though you were being paid by a credit card by every customer. You get paid immediately. You give us the invoice, we confirm that the invoice is proper, and zap, you get paid. And then we collect from your customer.
The reason that I would do it, if it was my company, and I am a business owner and I do own businesses and I do factor, is because it gives me the ability to convert my business to cash. It gives me that flexibility to have cash build up in my bank accounts. It gives me the ability to take discounts on supplies. It gives me the ability to grow my business and to finance new business. It's a much more flexible program than borrowing or going into a bank loan. What we typically do with your existing book of business, we will send them out a notification letter, letting them know that you qualify for our program. Once we send out the notification letters, we would then go ahead and review your receivable history with that particular debtor, and then we would purchase those receivables and utilize those as if they were a new receivable. We would go ahead and make the same advance on that receivable as we would typically on a new receivable. But again, it's based on the creditworthiness of the debtor.
Basically, your client has to be creditworthy. I use some silly examples sometimes. I'll look at an ideal client. I'll say, okay, you sell bullets to the Navy. Okay, what does that mean? That means that you're going to invoice the U.S. Navy. I'm going to buy that invoice. Am I fairly confident that the Navy is solvent and can pay its bills? Yes, I am. So I'm going to buy that invoice from you all day long. And I'm going to buy that invoice whether you've been in business for 3 months or 2 months or 10 years. I'm going to buy that invoice from you whether you've just gotten out of bankruptcy, whatever your circumstances are, because I am buying and I'm going to own the invoice to the U.S. Navy. And they're going to pay me directly. And I'm not worried about getting paid. That's the beauty of factoring. The focus is on the creditworthiness of your customer.
It depends on what your needs are. You can basically get money advanced to you on a daily basis, weekly basis, bi-weekly basis, monthly basis. You control your fees, you control your cash by the way you submit your invoices. So it all depends on what your cash flow needs are. But you're in complete control of that.
We strictly deal in business-to-business transactions. There are plenty of businesses that render invoices to individuals. I'll give you an industry as an example. Let's say you're a landscaper and you have clients both on the private and commercial side, meaning that you service homeowners and you also have municipalities, universities, hospitals, whatnot as customers. I will buy the invoicing to those commercial customers, but I'm not going to go to Mr. Smith and Mr. Jones and try to get payment from them for a $30 or $50 a month landscaping bill. But if you have a contract with a commercial entity, be it, as I said, a municipality, a hospital, a university, and you bill them $500, $1,000, $5,000 a month, I will buy that invoice. We will advance you the money, and we will collect directly from them.
The discount fees on those invoices typically run anywhere from 2.5% to 3% on a 30-day period. It's not unlike most clients today who offer a 2% net 10-day discount on their invoice in order to convert them to cash, in order to accelerate their receivables. So the difference in that is when you go ahead and you offer a 2% discount, typically the client will take that 2% discount but pay you in 30 to 45 to 60 days. Not wanting to ruin the relationship with that client, you're obviously not going to make much of a fuss about it. Whereas with factoring, you're going to be paying virtually the same rate, but you're going to be getting your cash the next day.
Well, the cost is determined in this fashion. We will make that determination based upon the volume of business that you do, the nature of your product or service, the quality of your account debtors, namely your customers. And then the fees generally are going to be in the area of maybe 2.5% of the face amount of the invoice. It's really not unlike a situation where you might accept a credit card from your customer. So let me explain it to you this way. If you sent out your bills the first of the week, say on Monday, and on Tuesday your customer came in with a credit card in his hand, would you accept that credit card in full payment of the invoice? Of course you would. And what would you do? You would pay the credit card company a couple points, 2, 2.5, maybe 3 points, for the privilege of getting your money immediately. That's factoring. So in effect, anybody that accepts credit cards already is really factoring. They just don't know it and they don't call it that. But when you're willing to pay a small fee to get your money immediately, you're factoring. And let me give you an example. Let's say the fee is 2.5%. Well, that means at 2.5%, if your invoice is $1,000, for instance, you'll pay $25 rather than waiting 30, 40, 60 days to get your money. You get it the next day for $25. If your invoice is $10,000, rather than waiting a month or 2 months, you'll pay $250 and you'll get your money right away. It's a small price to pay for what cash can do to your business and how it can help you.
It's not a loan. It's not a loan. The reason it's not a loan is because we're purchasing the receivable. We're underwriting the creditworthiness of the debtor and we're purchasing that receivable.
The focus in factoring is on the creditworthiness of your customer. Because don't forget, we're buying your receivable, and then we're going to look to your customer to pay us back. So when I explain factoring to groups of bankers, as I often do, they're amazed because their focus is always on the creditworthiness of what they call their customer, the banking client. And I explain to them, but Mr. Banker, if the receivable that you're going to purchase is owing from Sears and Roebuck or Home Depot or the city of Fort Lauderdale, aren't you satisfied with the creditworthiness of that? Wouldn't you want to buy that invoice? You know, it doesn't matter to you that the client who's selling you the invoice isn't that creditworthy. So we don't get into the considerations that a banker might, such as how long have you been in business? Are you profitable? Can you show us a balance sheet? You know, we'd like to see your last 3 years' tax returns. We're not so much concerned with that. What we're concerned with is what is the value of the invoice that we're buying? And the value is determined by the creditworthiness of who you're invoicing.
It's really not based on your credit. It's based on the creditworthiness of the debtors. So if you've provided a service or delivered a product to a creditworthy debtor, they're eligible for factoring. That's what we base our purchase on, the creditworthiness of the debtor, not on your credit.
Well, once you've given us the receivables, the customers have been noticed, we're going to immediately transmit those those invoices. We're going to transmit those invoices either electronically or by mail or by delivery to your customer. And as soon as the customer looks at the invoice and confirms to us that the service has been completed or the product has been delivered, we're then going to advance to you right away.
For example, if you provide a product to Sears, we would go ahead and upon delivering of the product and we receive the invoice, we would confirm that the product had been delivered, that the product is correct, that the invoice is correct, and that Sears is going to pay us based on the terms of that invoice. We would then go ahead and advance you a percentage of that invoice today. When Sears pays us, we would then give you the balance back minus a small discount fee.